The financial world just witnessed something that changes everything about how we think about Bitcoin. And in today's video, I'm going to show you 3 clear pieces of evidence that Bitcoin is decoupling from traditional markets. I'm going to explain why this is happening, why it matters to your portfolio, and I'll also reveal what might be driving this historic shift. And by the end of this video, you'll understand why Bitcoin holding steady at $81,000 to $83,000 while the Nasdaq tanked isn't just a random event, it's potentially the beginning of Bitcoin finally becoming the digital gold that could protect your wealth during economic uncertainty, which is the moment that Bitcoin maximalists have all been waiting for. And you'll also learn how you can remove your personal information from online data brokers, but more on that later. Have you ever noticed that Bitcoin and the stock market have basically been joined at the hip for years? When tech stocks soar, Bitcoin rockets even higher, and when markets tumble, crypto often crashed twice as hard. And this relationship has been so consistent that traders could practically set their watches by it. But last week, something happened that left even seasoned market veterans scratching their head. The Nasdaq didn't just dip, it took a nosedive. We're talking about a brutal 6% plunge on Thursday, followed by another 5% drop on Friday. And this is the kind of market action that typically sends crypto into a death spiral. But Bitcoin, it barely flinched. You see, while tech investors were panic selling, Bitcoin held remarkably steady around the 83,000 mark and actually posted a 1% gain during a 24-hour period when everything else was bleeding red. And this isn't just unusual, it's potentially revolutionary, because since 2020, when major institutions and corporations started pouring money into crypto, Bitcoin has been firmly categorized as a risk asset, which is something that investors dump at the first sign of economic trouble. And the correlation between Bitcoin and tech stocks became so predictable that analysts could forecast market movements just by watching the Nasdaq. And what makes this sudden divergence particularly fascinating is that the crypto adjacent stocks took a beating with the broader market. Companies like Coinbase and MicroStrategy, whose fortunes are directly tied to Bitcoin, saw their shares drop significantly, yet the underlying asset they're built around, Bitcoin itself, remained unfazed. It's as if the stock market caught a nasty cold, but for the first time, Bitcoin showed immunity. Now, let's put some perspective on these numbers. While the Nasdaq has shed over 10% from its most recent peak, Bitcoin has actually been climbing, and this isn't just holding steady, it's swimming upstream against a powerful current, pulling everything else around it down, and that defies everything we thought we knew about Bitcoin and how it behaves in market downturns. For years, Bitcoin maximalists, those true believers in crypto's world-changing potential, let's put some perspective on these numbers. While the Nasdaq has shed over 10% from its recent peak, Bitcoin has actually been climbing. And this isn't just holding steady, it's swimming upstream against a powerful current that's pulling everything else around it down. And that defies everything we thought we knew about how Bitcoin behaves in market downturns. For years, Bitcoin maximalists have insisted that eventually Bitcoin would break free from traditional market correlations. They've argued that one day Bitcoin would prove itself as a safe haven asset, something investors flock to during emotional uncertainty, not flee from. Most of us in the financial world smiled politely at these claims while watching Bitcoin crash alongside stocks in every previous correction. But what if they were right all along? What if we're actually witnessing the exact moment when Bitcoin transforms from speculative tech asset to digital safe haven? And the data from last week's market action certainly suggests something fundamentally might be changing. Arthur Hayes, the founder of BitMEX and a respected voice in crypto markets, recently highlighted this divergence because he believes that Bitcoin is evolving into something more significant than just another speculative asset. It's becoming a more accurate gauge of fiat liquidity than traditional markets like the Nasdaq. Hayes suggested that Bitcoin holders should start embracing tariffs, hinting at a major shift in how global financial liquidity is measured and valued. And what makes Hayes' observation particularly compelling is the timing. Bitcoin's resilience comes precisely when the broader market is reacting to fears about potential economic policy shifts, including tariffs, that could reshape global trade. And rather than being dragged down by these concerns, Bitcoin seems to be benefiting from its position outside of traditional financial structures. And this separation raises profound questions about Bitcoin's true nature. Is this the beginning of Bitcoin actually starting to function as digital gold, a store of value that thrives during economic uncertainty? Because gold itself has historically performed well during market turbulence, and Bitcoin's recent behavior suggests it might finally be earning that long-disputed digital gold moniker. And for investors who've positioned Bitcoin as a small percentage of their portfolios precisely for this kind of correlation effect, last week's market action vindicates their strategy, because Bitcoin is behaving exactly as they hoped it would during market stress, because it is maintaining or even increasing its value while traditional assets falter. Now, of course, 1 week doesn't make something a trend, and we need to see this pattern continue through multiple multiple market cycles before declaring with certainty that Bitcoin has permanently decoupled from tech stocks. But the evidence is compelling enough that investors would be wise to reconsider Bitcoin's roles in their portfolios. And the evidence is also compelling that hitting the like button and subscribing to the channel is a free way you can show support if you're enjoying this content so far, and it is much appreciated. Now, as investors debate whether this Bitcoin resilience is a temporary anomaly or a permanent shift, few are noticing the corporate treasury revolution already underway. What if I told you companies like MicroStrategy aren't just holding Bitcoin, they're aggressively buying more regardless of market conditions, which is creating a completely different dynamic than we've ever seen before. You see, when traditional markets nosedived last week, something remarkable happened in the background. While investors typically rush towards established safe havens during market chaos, things like treasury bills or government bonds, gold bars, or simply cold hard cash, Bitcoin refused to follow its usual crash pattern. It steadied itself alongside those traditional refuges, signaling something fundamentally different about how the market now views digital assets, and this breaks every established pattern we've witnessed in the past market meltdowns. Remember when crypto was considered the ultimate risk asset? The first thing that investors would dump at the slightest hint of economic trouble was crypto. That playbook seems to have been completely rewritten, at least for Bitcoin. Behind this transformation lies a fascinating corporate strategy that's flying under most investors' radars. You see, Michael Saylor's MicroStrategy has essentially transformed itself into a Bitcoin acquisition vehicle, purchasing massive amounts regardless of market volatility, and their aggressive accumulation creates consistent buying pressure that acts as a stabilizing force when others are panic selling. They've even rebranded to simply Strategy, underscoring their singular focus on Bitcoin accumulation as their primary business model. But MicroStrategy isn't alone in this approach. Sean Farrell, who heads digital assets at Fundstrat, specifically identified multi-billion-dollar corporate treasury TWAP happening as a critical factor propping up Bitcoin prices while everything else faltered. You see, TWAP, or time-weighted average price, refers to systematic buying programs that corporations execute regardless of daily market conditions. These aren't emotional retail investors, they're calculated corporate treasuries deploying capital strategically, and this represents a fundamental shift in how companies view their cash reserves, because instead of letting inflation erode cash by sitting in bank accounts, forward-thinking corporations like GameStop are converting portions of their treasury into Bitcoin as a long-term value preservation strategy. You see, when GameStop announced a similar intentions to convert cash reserves into Bitcoin, they were signaling a new perspective on treasury management during economic uncertainty. And what makes this corporate buying particularly powerful is its methodical nature. Unlike retail investors who might panic sell during downturns, these corporate programs continue purchasing through predetermined schedules. This creates a reliable price floor that simply didn't exist during previous market corrections. And the buying pressure from these systematic corporate purchases effectively neutralizes selling pressure from more skittish investors. And while media headlines focus on day-to-day price movements, these corporate treasury strategies represent something far more significant, which is a structural change in Bitcoin's market dynamic. You see, these aren't short-term traders looking for quick profits. They are long-term holders with multi-year or even multi-decade time horizons, and their consistent buying creates stability that transforms how Bitcoin responds to broader market stress. And another crucial factor supporting Bitcoin's newfound stability is the continued inflow into Bitcoin's ETF, even during market turbulence. You see, unlike previous cycles where institutional interest would evaporate during downturns, these investment vehicles have maintained steady buying pressure, and this suggests professional investors are now viewing Bitcoin differently than other risk assets. They're viewing it as something to accumulate during uncertainty rather than liquidate. And perhaps most fundamentally, Bitcoin's capped supply of 21 million coins creates a natural scarcity that becomes increasingly valuable during periods of economic uncertainty. While central banks can print unlimited fiat currency and governments can issue endless debt, Bitcoin's mathematical limit means its supply can never be inflated. And this inherent property makes it particularly attractive when investors fear monetary debasement or economic instability. And the combination of these factors, strategic corporate treasury purchases, continued institutional investment, as well as fundamental scarcity, have created a perfect storm that's transformed Bitcoin's market behavior. When tech stocks plummeted last week, these forces provided enough counterbalance to maintain Bitcoin's stability, marking what could be a historic shift in its market positioning. Consider the implications here. If Bitcoin continues demonstrating this newfound resilience through multiple market cycles, it could fundamentally alter portfolio construction for institutional and retail investors alike. Assets that maintain value during market stress are extraordinarily rare and correspondingly valuable within balanced portfolios, and Bitcoin might be earning its place in that exclusive club. And equally valuable is the ability to remove your personal information from online data brokers, which brings me to the sponsor of today's video, Delete Me. Now, Now, this is a service that I personally use, and they have removed my personal information from dozens of sites. Delete Me helps you remove your personal information like your name, address, phone number, email, and more from data broker websites that buy, sell, and trade your data. The process is as simple as the click of a button. Simply submit your information, and within 7 days, you receive a report showing exactly where your data was found and removed. Delete Me continues to monitor and remove your data all year long, and I can tell you from personal experience, it actually works. Now, you can get 20% off all US plans today by heading over to the link in the description down below to get started and join the thousands of people who trust Delete Me to protect their online privacy and take control of your data today. Now, back to the content. And while portfolio managers scramble to understand Bitcoin's unexpected stability, a much bigger story is unfolding behind the scenes. The greatest financial joke of the last decade, Bitcoin as digital gold, is finally becoming reality during the exact economic conditions that should make it shine. And it's happening right under the noses of the same financial elites who dismissed the concept for years. Remember the mockery Bitcoin maximalists faced when they insisted their digital asset revolution? Their digital asset would eventually function as a store of value during economic turmoil. For nearly a decade, these advocates were ridiculed by traditional finance experts who pointed to Bitcoin's volatility as proof it could never serve as a reliable safe haven. Every market correction seemed to confirm that the critics were right, as Bitcoin typically fell harder and faster than equities. But something fundamentally has changed in the economic landscape. We're no longer just dealing with routine market fluctuations, we're literally facing a perfect storm of macroeconomic pressures. Potential new tariffs loom on the horizon, trade tensions are escalating, and the Federal Reserve has issued warnings about both inflation persistence and slower economic growth. And these aren't just abstract concerns, they're precisely the conditions that make non-sovereign stores of value increasingly attractive. And Fed Chair Jerome Powell has specifically cautioned that implementing reciprocal tariffs could trigger significant economic challenges. Think about what happens when goods become more expensive due to tariffs. Global trade slows and inflation becomes more difficult to control. Traditional markets struggle in this environment, but Bitcoin, designed specifically to exist outside of government monetary control, suddenly looks more appealing. And Eric Weiss from Blockchain Investment Group captured this advantage perfectly, stating, "There are no tariffs on Bitcoin." And this simple observation highlights Bitcoin's unique position outside traditional economic restraints. As Weiss further elaborated, as the tariff war escalates and stocks bleed, Wall Street will eventually realize there's an alternative: Bitcoin. No earnings risk, no geopolitics, just math. And his perspective has become a rallying point for digital asset supporters who recognize Bitcoin's potential advantage in this new economic reality. And what's particularly revealing is that we've seen hints of this behavior before. During the 2018 US-China trade war, Bitcoin demonstrated similar characteristics. While its overall yearly performance didn't show gains, Bitcoin experienced a notable 15% price increase, specifically when trade tensions escalated in mid-2018, right after the US imposed tariffs on Chinese goods and China retaliated. This historical pattern suggests Bitcoin can respond positively to trade conflict, potentially serving as a hedge during periods of economic uncertainty. And the contrast between Bitcoin's performance and traditional markets during that 2018 trade war is especially instructive. While the stock market suffered from the escalating tensions, Bitcoin showed resilience during specific periods of heightened conflict. And this precedent provides a blueprint for what we might expect if current trade tensions continue to escalate. And what's different today is that Bitcoin has matured significantly since 2018. The regulatory environment, while still evolving, has provided more clarity than ever before. Institutional adoption has also progressed from experimental allocations into strategic treasury positions. The infrastructure supporting Bitcoin has become more robust, making it accessible to both retail and institutional investors through familiar financial products. Meanwhile, Bitcoin's supply constraints remain unchanged. Its mathematical limit ensures no sudden inflation of supply can dilute value. This combination of improved adoption, clearer regulations, and immutable scarcity creates ideal conditions for Bitcoin to fulfill its long-predicted role as digital gold. We're witnessing the convergence of Bitcoin's inherent properties with the exact economic conditions they were designed to address. The borderless nature of Bitcoin means it can be directly targeted by country-specific economic policies, means it can't be directly targeted by country-specific economic policies. Its policy-resistant design makes it immune to the money printing that typically accompanies economic stress, and its predetermined supply schedule continues regardless of market conditions or government interventions. The market is slowly recognizing these advantages, and investors looking for assets that can maintain value through economic uncertainty are increasingly considering Bitcoin alongside traditional safe havens. The narrative is shifting from speculative digital asset to strategic portfolio component, exactly as Bitcoin maximalists predicted. Now, I'm going to tell you exactly what my thoughts are on this, so here's my thoughts. What we're witnessing isn't just a temporary deviation. It's potentially honestly the financial storyline of the decade. Bitcoin's resilience during market stress isn't happening by accident. As David Hernandez from 21 Shares notes, this impressive stability is reinforcing Bitcoin's status as a macro hedge precisely when investors need it most. And this emerging pattern creates an extraordinary opportunity for investors who recognize this shift before mainstream awareness catches up. The combination of rising geopolitical instability and trade tensions perfectly highlights Bitcoin's fundamental advantage as an asset that transcends borders and resists policy manipulation. And whether you're a longtime believer or recent skeptic, one thing is undeniable: Bitcoin's behavior during turbulent markets signals a profound evolution that demands our attention.